In this video, I'm going to be showing us two huge opportunities in the derived synthetic indices, and these two huge opportunities are present in crash 600 index and volatility 25 index. So I'll be hoping that you'll be lucky enough to come across this video before these trades play out. So I'll be starting out with the crash 600 index. And so I'm going to be doing a quick top-down analysis so that if you're able to watch this video till the end, you should be able to take advantage of this analysis. So I'm currently on the monthly time frame, and as is customary, we'll try to mark our relevant key zones using this rectangular horizontal bars, as well as try to also get our directional bias. So key zones, like I'd always explained, are simply rejection zones. They are areas where price has either been supported from going downwards or rejected from going upwards. So now these are the relevant ones that I've just simply put out on the chart. And if you do not know how to do this, I have a video on the channel dedicated to it. So the next thing would be for us to get our directional bias. How do we do that? That would simply be by looking at the structure of the market. Now, how do I mean? So the market, as we can see before us, has been giving us higher highs and higher lows. You can see that the market came up here to give us a high, came back down to give us a higher low, gave us a double top, and tried to go downwards. In other words, it tried to change its trend from an uptrend to a downtrend, but this did not hold, as the market ended up giving us a new high, and now we're seeing a retracement. If I come back to the candlestick chart, we can see here that we have a high, a higher low, we had a double top, and then price fainted as though it was going to go downwards, but ended up reversing. Now we have a new high, and now price is trying to do a retracement in the sense that we have a bearish pin bar. So this candlestick, this bearish pin bar, simply makes us understand that price is still dropping downwards. So the next thing we'll get to do will be to go to the weekly time frame. On the weekly time frame, we try to look for a candlestick chart pattern or a chart pattern that we can work with. Now, if we look at what we have before us, if we come to the line graph, you can see that we have the simple bullish chart pattern. Now, what do I mean? When we have price giving us a high, and then we have a higher high. So when price is making a retracement, so when we have consecutive highs and lows, we say that we have a simple bullish chart pattern. So we have a high, a higher low, a higher high, and now we'll have price trying to give us what? A higher low. And remember, on some of my previous videos, I had always stated that the most important areas in an uptrending market are the what? Higher lows. And that's simply because buyers try to buy at prices as low as possible. So price is actually trying to give us to come to a strategic position where we can buy to make maximum profits. So the question would now be, how do we now take advantage of this pattern that we just illustrated? So the next thing will be first for us to come back to the candlestick chart and include some of the tools that I use in my analysis. So we can see clearly that the market is in an uptrend. We're seeing higher high, higher low, higher high, and price is making a retracement. So first I would want to add trend line just to make me understand that okay, I'm dealing with a clear uptrending market, and within this trend line I have like another what? Internal trend line. This is important because price will definitely react, because we have one touch, two touches, and a third touch. We react to this line before it decides to come down to this one if need be. So would have been able to react to whatever price does here before we'll think of this external trend line. So having done this on the weekly time frame, we can now go down to the daily time frame. So I call the daily time frame the tradable time frame because it gives us a clearer picture of what would have seen on the weekly and monthly time frame. So here we can make adjustments of our levels to touch the zones properly. So I can shift this down a bit, and the next thing would be also to include my Fibonacci retracement tool from this swing low to this swing high. And from what we can see that price is coming aggressively into our Fibonacci retracement to golden zone. So you can see that from this setup, we have one touch of this internal trend line, another touch, and then price is coming into the Fib2 zone, golden zone, which is a zone between the 50% and 61.8% mark. Now, what price has also succeeded in doing is to use this major support level as a liquidity zone. What do I mean? A lot of people would have been trying to, or waiting here to buy this particular index, but you can see that price just blew past it and it's currently within our Fibonacci retracement to golden zone. So I'll just highlight this and probably try to change the color of this to a golden color. So price is currently here. So now we have like a complete setup. So the question would now be, what do we do with this setup? Now the opportunity here would be for us to get this or able to make use of this opportunity. We have to be patient in the sense that now we have sellers in full control of this market for now, even though it's in a clear uptrend. So for us to take advantage of this, we can go to one of our entry time frame and see what price is doing clearly. Price is just coming into our key zone. It will probably make a third touch of this trend line before buyers will start coming into the market. So how do we know buyers have started coming into the market? That's when we start seeing the presence of what? Green or bullish candles. And if I'm to zoom in, we can see clearly that even though we have an uptrending market, price in this retracement is giving us lower lows and lower highs. So until there's a change in this structure, it would not make sense to engage in buying this asset. So even if I were to go to the 1 hour time frame, you can see now that the lower lows and lower highs are even much clearer. So the question would now be, when will I personally want to jump into this particular market? First, I would want to employ what I call the counter trend line mechanism, and that's by simply coming here and drawing a trend line down. So when this trend line is clearly taken out, then I would want to then jump in. Another thing would be, if, just like I said, there's a change in what the structure of the market. So if we were to have something like this, and then we have something like this. So if price were to come here, and instead of coming to give us a low, price ends up giving us a higher low, and then I can start thinking of entering with this leg with my stop loss underneath this level. So this is my take on crash 600 index. This is the opportunity, the pending opportunity here. So if you're able to come across this analysis, it will make sense for you to patiently wait for this to play out and compare it with your own analysis as well. So very quickly, let's look at volatility 25 index. So I'm also on the monthly time frame, and from what we can see on this time frame, I wouldn't want to start drawing bars as well because I want to keep this video short. From what we can see on this time frame, we can see that the market was initially giving us lower lows, lower high, lower low, lower high. It came all the way down to give us a low, lower low, and then it gave us a lower high. But this lower high was invalidated because it failed to give us a new what? Lower low. So let me take this again. Let me use this. So we had price moving from here to give us low, a lower high, lower low, lower high, came all the way down to give us a lower low because it took out the most recent lower low, gave us a lower low. So it was supposed to give us a lower high, but this lower high was invalidated because it failed to give us a new lower low. Instead, price broke above it to give us what? A high. So we ended up having what? A new high. So and the high succeeded in giving us what? A higher low, and then gave us a new high, which was, so now then we have what? A high, higher low, higher high. So what we also have now is a retracement, and this retracement can be seen by this formation of this candlestick pattern, candlestick chart pattern, which is these three candles together, one, two, three, is what we refer to as what? An evening star. So an evening star, if it appears at a key zone, this is a key zone, and if it appears at a key zone, if price were going up as we've just seen now, and it shows up at a key zone, then it's an indication that price wants to go to the down side, which is what we're seeing now. But does that mean that the trend of the market has changed? No. So the market is still in an uptrend, but this is just what? A retracement, which now leaves us with the question of where do we think price is retracing to? At what point do we think price might want to embark again on its upward trajectory? So let's find out. The next thing we'll get to do, having seen that price is simply retracing, even though we have an uptrending market, I can do well to just map out the trend of this market, the external trend line, we'll have the internal one, and then we'll have price making a retracement. This will be of no use to us. And then we can go to the what? The weekly time frame. So on the weekly time frame, we now see the price movements clearer. Now, how do I mean? This was the most recent high that was taken out to give us what? A higher high. And then this was the retracement that we saw from the monthly time frame. So because of these aggressive movements, we can as well include our what? Fibonacci retracements too. So you can see that the analysis is quite simple. So now, having brought in this Fib tool, we can try to mark our Fibonacci retracement to golden zone, which is, like I stated earlier, the area between this 50% and 61.8% mark. And if we extend this a bit, we can see that it coincides with what? Previous support or resistance zone. So the question would now be what I asked earlier, where do I think price is retracing to? Don't forget this is a weekly time frame. So I think price, even though it's still in an uptrend, this retracement is not done yet. How do I mean? I believe that even though the bearish momentum is gradually reducing, but it is approaching a key zone, this would be a strong support area coinciding with the Fibonacci retracement to golden zone. So it will do well to see whatever happens here to see if we can get price moving again in the upward direction. So we can now come to the daily time frame. Now the daily time frame, this downward movement becomes clearer. You can see that the upward movement faded out, and now we have this retracement coming downwards. So this would be where I'll be waiting for price. I actually give a sell signal on the Telegram channel, my Telegram channel, just before coming to make this video, and the first take profit point was just smashed before I embarked on making this video. So the key area I'll be waiting for price to get into would be this Fibonacci retracement to golden zone, and if sellers are strong enough, which I doubt may happen, they can even push price as far as coming to make what? A third touch of the trend line. And in that case, they would have used this Fibonacci retracement to golden zone as a liquidity zone. So while we are selling the market, we have to patiently see how this whole thing plays out. And if I come to the 4-hour time frame, then we can see that we are left with a clear downtrending market. And just like I used the counter trend line for the crash 600 index, it helps every time. So just place it here, especially from the H4 time frame, and see what happens. So if this trend line is taken out and there's a change in structure in the structure of the market, then we can start trying to look for buying opportunities. So for now, just like we saw the strong bearish reversal chart pattern from the monthly time frame, that is, I'm talking about this evening star, you can see that price is still heading downward. So it will do well to look at how price reacts to this area. If the selling momentum is still strong, then we can just hold off or keep selling and hope that price gets to make another touch of the trend line before another big bullish run to give us a new high ultimately. So like I said, I wouldn't want to make this video longer than this. If you come across this, you can compare this with your own analysis and monitor this to see how it plays out. Like I said, we're currently buying on in my Telegram group, and I hope it hits all our take profits points, because I actually give them 3. This is a trading academy channel. If you want to learn how to do this, you too can learn how to analyze the market skillfully like this. You can reach out to us and then we'll work something out. Do enjoy the rest of your trading week. Thanks for stopping by my channel. Don't forget to like, share, and subscribe. Turn on your notification for subsequent videos. Cheers.